Hello and welcome on this new weekly market analysis video from Xtreme Trader. This is Salah speaking. So before we start analyzing the market, guys, I wanted to remind everyone about the high impact news that we will be having in the upcoming week. As you can see, on Monday we will be having the ISM PMIs for the USD pairs. Then on Tuesday is going to be actually a calm day. Maybe in the morning we will be having some high impact, but anyway, I don't trade actually this time, and I believe many of my followers here also following this rule that we actually avoid trading early in the morning. Therefore, we can actually ignore this one right here. And then of course on Wednesday we will be having the ISM services PMI for the USD pair, and then Thursday we are having the it's actually going to be a busy day for the CAD and the USD pairs. We will be having the unemployment rate and the employment changes for both the CAD and the USD. But however, Friday is going to really be a boring day. It's going to be really a low volatility in the market, and actually we can barely make any trades. Maybe we can actually trade the news, because we will be having at 4:30 p.m. Dubai time, 12:30 GMT time, we are having the unemployment rate and the non-farm payroll for the USD pairs. Usually this one actually make a good impact on the market and actually can be very profitable if you trade the news. However, let's now, guys, begin analyzing the market, and let's now start with the Euro USD. So it's a good thing actually that the Euro USD signal is right now actually running in a very small loss of just 9 pips, because we are actually about to change this signal. We can no longer buy it. Of course, guys, this signal was sent on the last late week analysis video, which I have posted Thursday morning. However, let's now delete everything and start from scratch. Now let's move to the weekly chart. Based on the weekly chart, we can notice right here that the Euro USD is actually respecting that level of a resistance trend line. And in fact, if we look at the bigger picture, if I just keep scrolling to the left side, we can notice right here that we had also a strong key resistance level exactly at 1.09048. This was, my friends, a real level of a resistance which has been respected repeatedly over the time. It became also a strong key level of a support, and then a fake breakout right here, as we can see. Keep in mind, I'm on the weekly chart. Then we can see that the same level has also been respected as a support. Then later on, back in November 2022, it has been respected as a resistance, and lately right now, March and April, also being respected as a resistance, which means that actually after the closure of the candle, this is of course the closure of the March candle, and right now the April candle is gonna start, and most likely it's gonna start bearish one, which means we can actually consider selling the Euro USD, especially seeing that actually that is exactly what I'm talking about. That is, my friends, a perfect sell setup. Once you see a real level of a resistance being followed later with a fake breakout, it's always a good idea to sell exactly on the same level of the real resistance, ignoring the fake breakout. Now we can see that the market has already made right here a resistance number 1, and right here also a resistance number 2. Which means that the Euro USD is indeed right now getting ready for the fall. So therefore, we have to consider shorting the Euro USD. The question is where? Moving to the 4-hour time frame right now. As you can see also, this is exactly what I just told you about. This right here, my friends, this was a real level of a resistance exactly at 1.08710. So the real level of a resistance lies right here, and we had here a fake breakout. Now, since the Euro USD is actually facing right here a support zone, as you can see, there is a possibility that the market actually by the opening on Monday can make a pullback, and therefore we can start shorting the Euro USD exactly at the same level of a real resistance. If that happens, that's going to be a good news, because we will be having a head and shoulders pattern completed, and therefore shorting the Euro USD right here is going to be ideal. Therefore, selling the Euro USD after it make a pullback for about 30 pips is going to be our target. However, the take profit level has got to be placed right here at the previous real level of a resistance right here, as you can see, at 1.07910, which means we will be targeting 81 pips of profit. Meanwhile, the safe zone shouldn't actually be ranging higher than this level of a resistance at 1.09114, because that's the peak of the fake breakout, and therefore if the market is going to actually be able to reach that level, then that means that this setup is no longer valid, of course, and most likely it means that the EURUSD has a potential to continue the rise. But again, I don't see this is happening. However, The safe zone is ranging for about 40 pips only against 80 pips of profit. Let's now move to the pound USD. Alright, so as you can see, my friends, the pound USD has actually reversed almost from the take profit level, making this signal not valid any longer. So therefore, the buy order originally was actually a correct decision, since we can see that the market has indeed begun the rise right here without triggering the buy area. However, it has reversed almost from the take profit level. So it was a good signal indeed, but actually did not trigger. Anyway, let's see now what we can do next with the pound USD. From the first side on the 4-hour time frame, we can see right here that we're actually facing a resistance zone, and as you can see, the market has actually failed to create the bullish breakout from that level of a resistance zone. So let's now move to the daily chart to see that actually. Now in the bigger picture, we can see that the market is actually facing a trouble to break out from that level of a resistance area right here at 1.24465. And now, since the daily candle has actually closed below that level of a previous resistance, let me just show it to you. So we had right here a resistance level, as you can see, and the market has indeed managed, actually didn't manage at all, it actually broke out from it, as you can see right here with that bullish breakout candle, and then instead of creating here a new support, it actually has ignored that level of a resistance and just kept falling right here, which means the pound USD is most likely now gonna make a pullback right here, and that level of a previous resistance is gonna actually be respected. So instead of becoming a new support, it will become now a new resistance. So moving back to the 4-hour time frame, as you can see, this was of course the nearest level of a real resistance right here, exactly at 1.23583, and now we can see that the pound USD actually facing right here a resistance, a support zone. So meaning there is a possibility for another pullback by the opening of the market on Monday, and then that level of a resistance will be also respected, and again we will be having a head and shoulders pattern, which means selling right here is gonna be the right decision. Therefore, selling right here exactly is gonna be our target, and the safe zone is gonna be ranging till the peak of the resistance right here exactly at 1.23998. Meanwhile, the take profit level, my friends, is gonna be placed just right there at the nearest strong key real support level at 1.22325, which means the take profit level is gonna be about 125 pips. Meanwhile, the safe zone will be ranging for about 43 pips only. Let's now move to the AUDUSD. Alright, so AUDUSD signal from the late week analysis video has actually been triggered. It was really a good entry. As you can see, it was a sniper entry. However, the market has actually kept going in about 46 pips of profit before falls back, and now ranging inside of the safe zone, currently running in about 6 pips of loss inside of the safe zone. However, buying right now is no longer valid. Actually, the market has indeed reversed as I have expected, but the current price action which has appeared on the 1-hour time frame and the 4-hour time frame, those price actions here has actually changed the game. As you can see, we have already ended up with a head and shoulders pattern, which indicates that the AUDUSD is actually now gonna continue the fall. That price action, of course, was not here when I have sent the last late week analysis. So therefore, let's now analyze the AUDUSD and see how and where exactly we can start shorting this pair. Now, just to confirm the direction, let's move to the weekly chart, and as you can see, my friends, on the weekly chart we're having that resistance trend line, and seems like the market is indeed respecting those levels of a resistance trend line. Of course, when the market has made here the bullish breakout from that level, it has actually ignored it to create a new support trend line, and instead it has actually made the bearish breakout from here, and then kept creating number 1 and number 2 resistance trend lines, which means we have ended up with 2 resistance trend lines right here, which means also that the AUDUSD is indeed going to continue to fall at least to reach the nearest level of a support right there at 0.6537. Now moving back to the daily chart. Now on the daily chart we can see actually it was 3 attempts, not 2. Of a resistance trend line, of course. Now the last attempt on Friday actually has proven the strength of this level, and indeed the daily candle has closed as a red bar, which means indeed, as I have mentioned earlier, the AUDUSD will definitely gonna continue the fall. Not to mention, of course, the price action. These two candles right here of Wednesday and Thursday, actually, once we see these price actions on a resistance level, and especially on the daily chart, usually it's like a confirmation for the bearish reversal. Once you see a candle like this appeared on the resistance level, it's usually a confirmation that the market now will begin the bearish fall. So it's indeed a sign that we can start shorting the AUDUSD. So moving back to the 4-hour time frame, we have to identify the strongest levels of a resistance, because right now the AUDUSD is actually facing right here a support zone area, which means there's a possibility for a pullback by the opening on Monday. However, to find the best level to start shorting this pair, we can actually use the Fibonacci retracement, and as we can see right here, indeed, that level of a resistance exactly at 61.8. 61.8 Fibonacci retracement is going to be indeed the best level to start shorting the market. Not to mention, of course, it was in the past a strong key support level, which has already become a strong real level of a resistance, which has been respected over the time. Every single time the market has made here a bullish breakout from that level, it appeared to be a fake breakout. So therefore, selling exactly at 0.67117 is going to be our target. We have to wait for the market to rise for about 26 pips before we can start shorting it. The take profit level, as I have mentioned earlier, is going to be right here, the lowest level of the support, exactly right there at 0.65754, which means we will be actually expecting 136 pips of profit. Let me just lower this line right here, the target, to make it more realistic and achievable. So therefore, the take profit level is going to be exactly 117 pips. Meanwhile, the safe zone is going to be ranging till the highest level of the fake breakout right here at 0.67550, which means the safe zone is ranging for about 42 pips against 117 pips of profit. Let's now move to the USDCAD. Alright, so the USDCAD signal has almost reversed from the sell area. It has reversed just like I think 13 or 14 pips far away from it, and right now running in about 50 pips. However, we cannot of course consider this signal as triggered at all, but actually eventually, I mean, and in the end, it has reversed almost from the zone of that sell level. However, let's see now what we can do next with the USDCAD. Now, by moving to the weekly chart, we can actually see something here really interesting, because we can see right here that the market has actually created here a resistance level, and indeed based on the weekly chart, the market has here made actually the new resistance, but the last week candle was the odd, because the market actually after these movements was supposedly to move right here and continue the growth to reach the highest level of the resistance right here at 1.39755, but instead the last week candle has actually been a strong bearish one, and the market has actually kept falling all the way right here, breaking out from that level of a support and a resistance as well. Which means there is a possibility that the USDCAD eventually going to continue the fall to reach that level of a support at 1.32840. But keep in mind, we are actually talking about the weekly candles, which means the nearest support right here exactly is going to be actually tested. And most likely, since we are actually talking about the weekly candles, which means the new candle actually might test that level of a previous support and then makes a pullback. And at this level right here on the previous resistance is going to start the bearish fall, which means this week, my friends, we are going to trade the pullback, and the week after, if everything went correctly as I'm expecting it, then the next the week after actually we will be looking to short the USDCAD from that level of a resistance. Therefore, we are just hoping for a pullback right here to reach the resistance after rising for about 162 pips. Therefore, moving now to the daily chart. Now on the daily chart, we can see clearly right here that this was indeed a real level of a support exactly at 1.34843, and the USDCAD is actually just approaching that level after falling for about 31 pips. Another way, of course, to confirm this theory is by looking at the support trend lines, and as we can see right here, indeed, the market, my friends, seems like it's actually going to end up respecting that level of a support trend line. The market actually, based on the daily chart, has actually been respecting those levels for actually for almost a year. I mean, since May 2022, it's actually respecting that level of a support trend line with 4 attempts of a real support trend line. Therefore, if the USDCAD is going to fall right here, first of all, it's going to be retesting the support level right here and also respecting the support trend line right there. And from that point, the USDCAD is going to continue the rise. And as I mentioned earlier, the nearest resistance right here is gonna be our take profit level and a new sell area. Therefore, let's buy the USDCAD from that level. However, the take profit level is going to be placed just right there at the nearest real level of a resistance at 1.36240, which means the take profit level is going to be 142 pips of profit. Meanwhile, the safe zone shouldn't actually be ranging lower than this level of a support right here, exactly at 1.34263, which means the safe zone ranging for about 56 pips against 140 pips of profits. Moving now to the USDJPY, which is gonna actually remain the same because the market has actually almost reversed from the given buy area. However, the market kept rising to reach the take profit level. However, I still believe strongly that the USDJPY will continue the fall, and again the same level of the previous real level of a support is indeed gonna be respected and the take profit level is gonna be achieved. I mean, if we look at the weekly chart, we are still actually facing the same thing. I mean, the same setup right here is still being respected. That level of a real support right there exactly at 130.511 has actually been respected, and that was of course a strong bullish engulfing candle, which means the next candle is surely gonna be bullish as well. And if I'm not mistaken, the final target for the next week is gonna be the highest level of a resistance at 136.460. The USDJPY actually on the daily chart has actually shown us right here a strong bullish engulfing candle as well, broken out from that level of a resistance, but most likely that level of a real support is gonna be respected again. Therefore, there is absolutely nothing to be changed from the USDJPY signal. It just remains the same from the late week analysis video. And let's now move to the USDCHF, which by the way also remains the same as well. The USDCHF, my friends, has almost been triggered. It has reversed exactly just like 2 pips far away from the take profit from the sell area and went in total of 60 pips of profit before running currently in 27 pips of profit. So again, for the USDCHF also, there is absolutely nothing to be changed from the late week analysis video, my friends. The signal just remains the same. The bearish breakout candle here has just proven that this signal is most likely correct one. And if the next candle is going to continue the rise, it's going to be retesting actually the broken level of a support trend line and also respecting the level of a resistance right here that we are facing. And therefore, the candle is going to continue the market is actually going to continue the fall to reach the take profit level. So again, USDCHF also remains the same. Let's now move to the gold. Alright, so the gold signal has actually been ranging at the take profit level for multiple times over the last week. However, I have sent the signal on the late week analysis video to buy the gold exactly from that level. As you can see, the market has reversed just like I think 30. Yeah, exactly, almost 25 pips far away from our sell area and kept rising and actually reached the take profit level multiple times, for actually more than 4 times before finally starts the fall. So what does that mean? Can we actually still consider that the gold is actually going to continue the rise at this point? I actually doubt that. Let me now delete the old signal and let's see now, my friends, what we can do next with the gold. Let's actually move to the bigger time frame and let's move now to the daily chart. Now the daily chart, my friends, shows us again that we are still facing that triangle pattern. Now, if we look closer at the gold right now, the gold is actually reaching the narrow area of that triangle. However, the current price action right here actually shows that the market is actually getting ready now for the fall. Let me just move now to the daily chart to show it to you. Actually, the 4-hour time frame. The daily candle is actually not really cutting it. Let's now move to the to the 4-hour time frame. Now on the 4-hour time frame, we can see right here that we actually have ended up with a 3-top pattern, which means that the gold actually, after the appearance of the 3-top pattern right here, is most likely now gonna start the fall. Another thing to confirm here is by looking at the support trend lines, and as you can see, that was the support trend line, and the market has actually made the bearish breakout from that support trend line, and now the pullback seems like it has begun, which means that most likely the gold on the next movement is actually going to continue the rise. At some point right here, we can actually start selling the gold and the target is, if the gold is gonna indeed falling right here, the target has got to be placed right here, of course, the support at 1949.80. So therefore, if I'm not mistaken, and hopefully I'm not, this week we are looking to short the gold. Now moving to the 1 hour time frame, just to see the levels correctly. As you can see right here, we can see that the market has actually faced right here a real level of the resistance at 1975.34. Now, to be honest with you guys, I really don't see the gold rising at this point. After the appearance of that real level of a resistance and the 3 top patterns, the gold actually have a very low chances to make any bullish movement at the moment. Most likely now the gold has indeed left the area of that triangle right here. Of course, I need to mention this. This is, of course, my friends, a triangle as well, as you can see. Let me just make it clear for you, like that. So as you can see, my friends, this is, of course, what we call the sniper strategy for scalping, or actually for trading. The market has actually ended up here making a triangle pattern and finally has left that triangle with that strong bearish movement right here. Therefore, selling right here exactly at the previous resistance, meaning that the market is indeed respecting that level of a previous resistance and also retesting the broken level of a resistance, a support trend line. Therefore, selling right here, my friends, is going to be our mission for this week. We have to wait for the market to rise for about 60 pips before we can do that. However, the take profit level, to have a safe entry and a safe take profit level also, is going to be placed at the absolute lowest level of the real support at 1944.92, which means it's going to be about 300 pips of profit. Meanwhile, the safe zone shouldn't actually be ranging higher than the peak of the resistance at 1987.76, which means the safe zone ranging for about 124 pips against 300 pips of profit. So that's everything, my friends, for the USD pairs and the gold for the next week. I will see you tomorrow in a new video analyzing the pound JPY, the oil, the Dow Jones, and the dollar. And also I will do my best to provide you with a daily live trading videos this week. I will do the best I can to record all of my trading sessions for the entire week to show you how much we can actually make by scalping the market in intraday trading. And hopefully, guys, it's going to be so good and beneficial for you. Anyway, until then, I hope that is informative to you, and I would like to thank you for watching.